Good afternoon, welcome to Market Wrap number 142. Stuart Williamson here at the helm. Our weekly roundup of interesting events or stuff we think is interesting that's out there in the press. Telling you a little bit about what's going on, just to help you make buying decisions or not. This week, house price crash on the horizon, and it's not the UK. Golden visas going, gone. Most expensive place in the world to live. Knight Frank's 17th Global Report, a quick spin around it. A pill you will want to swallow, and the abuse of landlords exposed in full. So this week, house price crash that could wreck your finances. Where is it? Well, it's not Britain. The wobbling US market is the biggest threat to the global economy. Prices are starting to fall, mortgage arrears are starting to climb, developers are going bust, and others are stopping work on properties that they're already in train because they can't sell them. There are plenty of signs of severe downturn in the US property market, with home sales down for 12 straight months in a row. The weakest set of numbers for more than a decade. Having said that, it's the weakest numbers in the UK since 2007. So a similar sort of thing. Anyone who thinks that it's purely an American matter though is kidding themselves. Because if the US market crashes, it will tip the economy of the world into recession. And that will ripple out across everyone's finances. There will be losses on mortgages. It will threaten the stability of the whole financial market. Perhaps not as bad as 2007, 2009, but it's certainly going to be pretty grim if it happens. It will determine what the Federal Reserve will do with interest rates in the short term, and that will affect everyone's economy. In 2008, the collapse of the subprime mortgage market triggered the global financial crisis. It has happened before, and it could happen again. Okay, not to the great extent, but it could. With interest rates quadrupling over the last year, the British property market isn't exactly looking healthy. It's just stable at the moment, and it could go up or it could go down. Rightmove reported last week that homes prices are stalled, with the weakest figures since the online agency started compiling figures. The RICS surveyor, the Royal Institute Chartered Surveyors, reported that the market was the weakest since 2009. Even so, it's not a catastrophe, not yet. Prices are stable, they're not falling, and at the moment they may not fall. It's a very different picture though across the other side of the Atlantic. In many major cities, prices are now falling in absolute terms. In San Francisco, where many of the tech layoffs are concentrated, they are down by 7% this year. In Oakland, down by 4.5%, and in New York, 1%. Meanwhile, with the Federal Reserve continuing to push up interest rates aggressively, and with inflation not really coming under control, it's still up there, the outlook is looking pretty bleak. Having said that, figures released last Friday showed new home sales picked up in January, but measured on an annualized basis, they are still down by almost a quarter year on year. It's not a crash, but it's very close to one. Okay, golden visas going, gone. Basically, Portugal has ended its golden visa concept. It was an outstanding scheme. It was a way of you basically buying a property for 500,000 euros and getting right of residence after 5 years, something like that. And basically there's such a housing shortage there now, and prices have gone up by so much that they're getting rid of it. You know, it's the country that's one of the about a dozen that offers these residency schemes in exchange for foreign investment. Official figures suggested that they'd issued 12,000 resident permits to investors since 2012. Those invested had acquired more than 6 billion of real estate and transferred 700 million euros into Portuguese bank accounts. I've tried to source property there for clients. What was 200,000 euros is now all 500,000. It's absolutely crazy. So it's good that it's finished. Anyway, watch on, there's more to come. Cost of living. Where's the most expensive place to live? I can tell you where it is. I went out and bought a pizza here. It cost me £70. Singapore and New York are the world's most expensive cities, according to Economic Intelligence Unit's latest cost of living index, a platform used by HR teams to benchmark relocation packages. But Asian and US cities are moving in opposite directions, with US cities going up the rankings due to strong dollar, and Asian metropolises sliding down. On average, prices in key cities are up by 8.1% in local currency terms over the past year, according to the survey, which compares prices of more than 200 products and services in 170 cities. So overall 8.1% up. But measured out against exchange rates, it's different. The rising cost of energy, food, and impact of China's COVID-19 restrictions on supply chains are behind the index's biggest leap in 20 years. So, general figures in Europe: Zurich, Geneva, Paris, Copenhagen, and Oslo are the most expensive. The 3 UK cities surveyed all dropped down the rankings, obviously the weak pound, with London now 28th from 17th and 21, Edinburgh now 46th, down from 27th, and Manchester 73rd compared to when it was 41 last year. Okay, interesting stuff. Snippets from Knight Frank's 17th Global Resident Report. You can download it from our website. Do have a look, very interesting. Okay, wealth and talent are on the move. It's an ironic legacy of COVID, but it's led to a massive growth in the desire for mobility. You couldn't move, now everyone wants to move. So 13% of high net worths who are planning to acquire second passports or citizenships, 13% of all people of high net worths are trying to get those so they can move around the world more easily. The boom in so-called digital nomads is only just starting, promising disruption to outward bound countries, destination countries, tax systems, residential rental demands, and office requirements. Now, there are many governments out there wanting to get into this, which is opposite what Portugal are doing. So a competition to attract footloose wealth is hotting up. Alternatives to Western investor schemes in Portugal are growing. So you have places like Turkey, Dubai, Singapore, and Hong Kong all offering this. And just talking about Singapore a moment, Singapore's sevenfold growth in family offices is testament to the size of the prize for exchequers. Okay? Residential buyers facing new barriers to entry. Basically, new barriers to entry stop people moving around the world. In objection to what we're talking about, Canadian has banned all non-residents buying property this year. There's a new mansion tax in Los Angeles. There's tighter lending rules in Singapore, so foreigners can't buy as easily. There's higher fees and taxes for Australian non-residents to buy, and the Spanish are introducing a new wealth tax. Overall, the report says that buyers are looking for stability and transparency of ownership, and they're looking for new places to be, and this movement of people around the world is the new normal. Okay, so it's an interesting concept. There are a lot more people moving around, certainly we've experienced it. Now, this is a pill to swallow, you like. The Bank of England's chief economist, Hugh Pill, said yesterday that policymakers were wary of doing too much monetary tightening to curb inflation, suggesting that the rate rises may be put on hold after more than a year of aggressive action. Mr. Pill, who is a member of the Monetary Policy Committee, told the Times Radio that the bank had a lot of policy in the pipeline, as the full impact of 10 consecutive rate rises has not yet been felt in full in the economy. He went on to say, "It is important we guard against the possibility of doing too much," Mr. Pill said, emphasising that the committee would keep a Zen-like balance in our objective to get inflation down to its 2% target in the medium term. Okay, finally, a terrible eviction story. And you talk about landlords abusing clients, and this is the worst. The story is a wealthy baby boomer evicts his freeloading millennial tenants without following the correct guidelines, with no care for them. The rental crisis is so bad in the UK, it's affecting all levels of society. How else could you possibly explain the fact that King Charles has evicted his tenants, Prince Harry and daughter-in-law Meghan Markle, from their multi-million-dollar home in Frogmore Cottage? The quote is, "We can confirm that the Duke and Duchess of Sussex have been requested to vacate their residence at Frogmore Cottage," a spokesman for Harry and Meghan politely confirmed. Behind the scenes, apparently text messages have been flying as angry dad said things such as to his son, "I can't believe you wrote those things about me in your memoir. Okay, I did call you the spare once, but there's no need to get stroppy about it. By Jove, I've had enough, you can move out. And as long as you live under my roof, you'll abide by my rules, by my guidelines. By Jove, get your things and get out of here." So that's not following the proper channels, and it's not right. Finally, this week's questions. Why use an SPV to buy UK property? More than 1 in 2 investment properties are now purchased by limited companies, also known as special purpose vehicles or SPVs. Why? Number 2, what expat mortgage rates are available now? Are rates still going up? Question number 3, how can I buy an 8% rental yield property with just £9,000 deposit? What is BRRR? How can I make money off it? How can I do that as an expat? Buy, renovate, remortgage, rent out? And how can I invest in the UK distressed property market and make 12% per annum? Those are the questions this week. Now you're going to hear the answers to them. Why not join us at our networking events on the 9th and the 14th of this month in Singapore and Dubai? Registration links below. Okay? That's it for this week. Thank you very much for listening, for watching. Do take care. Apologies for the joke about King Charles. He's a lovely man, and I'm sure he didn't say any of those things. And it's purely my view and not that of APW's. Please subscribe, do like. Thank you very much. Bye-bye.